What's up traders, welcome back. Let's dive into the TSX stock review for the week of June 22nd. I've got the top 7 stocks monitored by NorthFlow Finance AI, you won't want to miss this. We're starting off with Elemental Royalty, ticker symbol ELE.TO, where we detected a signal on June 22nd. This signal was a moving average golden cross combined with a volume surge, which is a pretty strong indicator of a potential trend reversal. The MA golden cross, where the 50-day moving average crosses above the 200-day moving average, is often seen as a bullish signal, and when you combine that with a volume surge of 58.7%, it's a pretty compelling case for a potential upside move. At the time, the relative strength index was at 40.0, which indicated that the stock was not overbought, leaving room for further growth. The entry price was $22.61, which seemed like a good point to get in on the potential action. This week, the stock gained 4.2%, which is a pretty solid move, especially considering the overall market conditions. It opened at $22.10, reached a high of $23.48, and a low of $21.25, before closing at $23.04. This performance definitely validates the original signal, as the stock has continued to trend upwards. The recent news that Elemental Royalty has been added to the Russell and S&P TSX Gold benchmarks has likely contributed to the stock's weekly performance, as it's a vote of confidence in the company's prospects. Being included in these benchmarks can lead to increased visibility and potentially even more investment from index funds, which could further drive up the stock price. Looking ahead to next week, we'll be watching to see if the stock can continue its upward momentum, and whether it can break through any resistance levels. We'll also be keeping an eye on the relative strength index to see if it starts to get into overbought territory, which could be a sign of a potential pullback. Now let's move on to our next stock. We're taking a closer look at NIQ.V, a stock that caught our attention when a signal was detected on May 26, 2026. This signal was triggered by a combination of a moving average golden cross and a significant volume surge, which are key indicators we watch for in our analysis. The MA golden cross, combined with a volume surge of 63.2%, suggested a potential trend reversal, indicating that the stock might be gaining momentum and poised for a move upwards, given the relative strength index was at 54.1 at the time. The golden cross is a bullish signal that occurs when the short-term moving average crosses above the long-term moving average, and when you add a significant increase in volume to this mix, it can be a powerful indicator of a shift in investor sentiment. This signal, at the time, pointed towards a potential buying opportunity, with an entry price of $2.37. This week, however, NIQ.V declined by 5.8%, opening at $2.23, reaching a high of $2.24, and a low of $2.01, before closing at $2.10. This decline does raise some questions about the validity of the original signal, as the stock failed to maintain its upward momentum. Despite the drop, it's essential to consider the broader market context and the specific factors that might have influenced this stock's performance. The weekly performance suggests that investors might be re-evaluating their positions, leading to a correction. Recent earnings highlights from Magna Mining Inc., which showed strong revenue growth, have been making waves in the industry, and although this news does not directly relate to NIQ.V, it indicates a positive trend in the mining sector. This could potentially have an indirect impact on investor sentiment towards NIQ.V, as positive news in the sector can sometimes boost related stocks. The strong revenue growth reported by Magna Mining Inc. might suggest that the sector as a whole is experiencing an upswing, which could bode well for NIQ.V in the long term. Looking ahead, viewers should watch for any signs of the stock regaining its upward momentum, as well as any news or announcements that could impact its price. It will also be crucial to monitor the moving averages and volume to see if the golden cross signal is reaffirmed or if a new trend emerges. Now let's move on to our next stock. We're taking a closer look at Quantum Emotion, or QNC.V, a stock that caught our attention when it triggered a signal on June 18. This signal was detected when the stock hit a golden cross on its moving averages, combined with a significant volume surge, which is always a powerful combination. The MA golden cross plus volume surge signal is a bullish indicator, suggesting a potential trend reversal or acceleration, and at the time, it looked like QNC.V was poised for a breakout, with its RSI at 50.0 and a volume surge of 240.4%. This kind of signal can be a strong buy indicator, especially when combined with the volume surge, which indicates strong buying interest. The entry price at the time was $4.51, which looked like a good value given the signal. This week, however, the stock declined 6.7%, which may seem counterintuitive given the bullish signal. It opened at $4.50, reached a high of $5.06, and a low of $4.20, before closing at $4.20. Despite this decline, the stock's weekly performance doesn't necessarily invalidate the original signal, as the market can be volatile and signals aren't always immediately validated. In recent news, Quantum Emotion made a significant acquisition, buying up SKV and Jet Lab Technologies, which is a big move to become a full-stack cybersecurity provider. This acquisition could be a game-changer for the company, and it's possible that the market is still digesting the news, which could be contributing to the stock's weekly decline. The acquisition is a strategic move that could pay off in the long run, but it may take some time for the market to fully appreciate its value. As we look ahead to next week, viewers should watch for whether the stock can bounce back from this decline and continue its upward trend, and also keep an eye on how the market reacts to the recent acquisition. We'll be monitoring the stock's progress closely to see if it can regain its momentum and make a push higher. Now let's move on to our next stock. We're taking a closer look at Newfound Gold, ticker symbol NFG.V, which had a signal detected on June 22. This signal was triggered by a MACD bullish crossover combined with a significant volume surge, making it a stock worth watching. The MACD bullish crossover is a strong indicator of a potential trend reversal, and when combined with a volume surge of 59.0%, it suggested that the stock was poised for a move upwards. At the time, the RSI was at 27.6, indicating that the stock was oversold and due for a bounce. The entry price was $2.29, and it seemed like a good opportunity to get in on a potential rally. This week, however, the stock declined 3.1%, opening at $2.22, reaching a high of $2.31, and a low of $2.06, before closing at $2.15. This decline may seem counterintuitive given the bullish signal, but it's not uncommon for stocks to experience some volatility after a strong move. The weekly performance doesn't necessarily validate the original signal, but it's still early days and we need to keep an eye on it. The stock is still in a relatively oversold position, so there's potential for a rebound. There's been some positive news surrounding Newfound Gold, with the company being mentioned in a recent article highlighting TSX growth stocks with high insider ownership. This suggests that insiders have confidence in the company's prospects, which could be a positive sign for investors. The article highlights the potential for growth stocks like Newfound Gold to make a significant move upwards. As we look ahead to next week, viewers should watch for any follow-through on the bullish signal, and see if the stock can regain its momentum. We'll also be keeping an eye on any further news or developments that could impact the stock's performance. Now let's move on to our next stock. We're taking a look at stock number 5 of 7, which is ATD.2, and a signal was detected on June 23. This signal was a MACD bullish crossover combined with a volume surge, which is a pretty powerful indicator of potential upward momentum. The MACD bullish crossover plus volume surge signal is a strong indication that a stock is about to make a move upward, and in this case, the volume surge was a whopping 166.7%, which is a huge increase in trading activity. At the time, the RSI was at 82.2, which is a bit elevated, but the MACD crossover and volume surge took precedence. This signal suggested that ATD.to was poised for a breakout, and it was worth taking a closer look at. This week, ATD.to gained 13.7%, which is a pretty impressive move, and it's clear that the original signal was validated. The stock opened at 82.15, reached a high of 95.15, and a low of 81.63, before closing at 93.43. This performance suggests that the bullish momentum is still intact, and investors are still optimistic about the stock's prospects. The recent earnings beat, driven by strong fuel margins, has certainly helped to boost investor sentiment, and it's no surprise that the stock has surged as a result. The fact that Couche-Tard was able to drive earnings higher despite potential headwinds is a testament to the company's strength, and it's likely that this trend will continue. This news has clearly had a positive impact on the stock's weekly performance, and it's likely that we'll see this momentum continue in the near term. As we look ahead to next week, viewers should watch for any signs of continued upward momentum, and also keep an eye on any potential pullbacks or consolidation. The key will be to see if the stock can maintain its current level of momentum, or if it will start to lose steam. Now let's move on to our next stock. Welcome back to our weekly review segment on the NorthFlow Finance YouTube channel, where we're taking a closer look at stock number 6 of 7, BYD.TO, which had a signal detected on June 24, 2026. This signal was a significant one, and we're going to break it down for you. The MACD bullish crossover plus volume surge signal indicated a potential trend reversal, and with the RSI at 37.1, it suggested that the stock was oversold and due for a bounce. The volume surge of 92.6% was a clear indication of strong buying interest, and this combination of factors pointed to a potential buying opportunity. At the time, the entry price was $135.48, and we were eager to see how the stock would perform. This week, BYD.TO gained 8.7%, opening at $127.22, reaching a high of $141.05, and a low of $125.16, before closing at $138.25. This strong performance certainly validates the original signal, as the stock has shown significant upward momentum. The move higher was impressive, and it will be interesting to see if the stock can continue this trend. In other news, Boyd Group Services recently reported record first quarter 2026 financial results, which is a positive sign for the overall industry, and may have contributed to the surge in BYD.TO. This news may have helped to boost investor confidence, and we're seeing the effects of that in the stock's performance. As we look ahead to next week, we'll be watching to see if BYD.TO can continue its upward trend, and whether the stock can break through any key resistance levels. We'll also be keeping an eye on any upcoming news or announcements that could impact the stock's performance. Now let's move on to our next stock. We're taking a look at stock number 7 of 7, DIR-UN.TO, where we detected a signal on June 26, 2026. This signal was a moving average golden cross combined with a volume surge, which is a pretty strong indicator of a potential trend reversal. The moving average golden cross occurs when the short-term moving average crosses above the long-term moving average, and when you combine that with a volume surge, it can be a very powerful signal. At the time, the Relative Strength Index or RSI was at 57.0, which is not overbought, and the volume surge was a significant 43.1% increase. This signal suggested that the stock was gaining momentum and could be due for a rally. This week, DIR-UN.TO gained 3.1%, opening at 13.98, reaching a high of 14.42, and a low of 13.81, before closing at 14.42. This performance is a positive validation of the original signal, as the stock has continued to trend upwards. The stock's ability to hold its gains and close near its high for the week is also a bullish sign. There's been some recent discussion about how the investment story for Dream Industrial REIT is evolving, and it's interesting to note that this week's performance came despite a lack of new analyst signals. This suggests that investors are still finding value in the stock, even without any new research or recommendations from analysts. Looking ahead to next week, viewers should watch for whether DIR-UN.TO can continue to build on its momentum, and whether the stock can break out above its recent highs. We'll also be keeping an eye on the Relative Strength Index to see if the stock becomes overbought, which could be a sign of a potential pullback. That wraps up our weekly review. Subscribe for daily TSX signals from NorthFlow Finance. Thanks for tuning in, subscribe for more, and remember, this is not financial advice, consult a professional before making decisions.